Okay, next is John Welborn, with a man who came out of gold, knows how to run a gold mine, but is now in iron ore.
Did not time that well.
Yeah. So, yeah, great big lump of a thing. Feel like I'm having a smoke behind the toilet block here.
I got up too early? I didn't know. Are you going to do a long introduction?
No, I think I'm pretty well done, but you wouldn't want that running at you, would you? Anyway, please put your hands together for John Welborn.
Thank you. Just thought I'd get up quickly before we lost more crowd during Jonathan's boring talk about gold. I'm here to talk about iron ore. Very sexy subject. I know you're all here to listen to it, so thank goodness we're into the main game. You've obviously got the screen in front of you. Great. So the new Western Force in iron ore, it's a little bit of a tongue-in-cheek comment. One, because I'm the president of Rugby WA and played my last couple of games of rugby for the Western Force. And two, because anyone in mining, and I assume everyone here at the Sydney Mining Club are all deeply involved in mining, would recall the last Western Australian upshot who used that phrase was Andrew Forrest, when he said that Fortescue was the new force in iron ore. No one believed he was going to build something. We're a very different company to FMG, but it's really just a tongue-in-cheek comment, hoping that it pisses him off. I love this photo, though. I do want to just mention that this, I could just talk the entire 15 minutes to this picture because it sums up the current operations of Fenix and our future. And there's a lot in it. And the Sydney Mining Club, first of all, Julian, thank you very much for having me back. There's a disclaimer, which is the next slide. The real disclaimer I wanted to give to this audience is I first came to a Sydney Mining Club function with Equatorial, a budding iron ore project in the Republic of Congo. The shares were about 30 cents. They went to $4. I came back about 10 years ago and spoke for Resolute. The shares were about 80 cents. They went to $2. So none of you have got any excuse. Fenix are trading at 28.5 cents. I'm going to come back and I'll tell you all what they will be in a couple of years. And please listen to the presentation with that in mind. I'm much more excited about this story than anything I've ever done in the mining industry. Back to this picture. In the distance, in the blue sky, you can see the World Range. Iron ore was discovered in the World Range by Australia's first government-paid geologist in 1870. He had an argument with the then Premier of Western Australia, ironically also called Forrest, who believed that the Western Australian government should be focusing on cattle and not mining. So he buggered off to South Australia, where he was basically single-handedly responsible for building their mining industry. And at that point, the vast quantities of iron ore in the World Range lay unexploited. In the last 50 years, people wouldn't know, I need to hurry up through this, but a quick historical journey. Iron ore was actually embargoed. Pig iron Bob Menzies. The first iron ore ever exported from Australia was from Geraldton, and it came from Coolyanuka, not too far from here. And it's because the iron ore in this region was always identified. It's been eclipsed by the Pilbara. Billions of dollars have been spent defining hundreds of millions of tonnes of hematite and billions of tonnes of marketable magnetite. None of it has ever been exploited. They're not big enough to justify railways. They're not big enough to justify the big deep water ports you see in other places. And no one's been able to work out how to exploit them. Fenix has cracked the code. That's the World Range. In the foreground, you can see the highest grade iron ore mine on mainland Australia. And I say that because Koolan Island is off the coast and it's a little bit high. But it's a 65% ore body, beautiful stuff. We've done, this mine is an absolute cracker. There won't be anyone in the gold mining industry now, and certainly in the next couple of years, talking about the feasibility study they did 5 years ago. And the reason is their costs will have gone through the roof. Their revenues, like they'll be making much more money. I'm really proud. Fenix did a feasibility study on the mine you can see in this picture in 2019. We said we could spend 15 million Australian dollars to build a 1.3 million tonne per annum mine, which would have a 6-year mine life, and we would mine, crush, screen, haul and ship iron ore for 85 Australian dollars a tonne. And I know this because I looked at it in detail. I wasn't with Fenix at the time and I thought, bullshit. I next looked at Fenix when they were raising the $15 million to build the mine, and I thought, well, I've looked at the feasibility, I don't think they'll do it. And 3 months later, they were in production. And that's when I bought 10 million shares, and subsequently I've joined the company, and we're now using this as a footprint to build a significant company. Last quarter, our C1 cash cost was in the order of $76. It's $10 below the feasibility study from 5 years ago. Any other iron ore producer in Australia has seen their C1 cash costs go up between 20 and 50% during that period. We've brought ours down consistently. So that's the mine, crushing and screening, nice bit of product stockpile. The last thing in this picture is a 60-metre quad road train. We run these on public roads. They are 200 tonnes, they haul 140 tonnes. We've now done 50,000 individual 500-kilometre trips between Geraldton and the port of between Iron Ridge and the port of Geraldton. One of the things I really struggled to believe in the Fenix feasibility study, $85 was roughly $25 mining, crushing and screening, $50 haulage, $10 at the port, no G&A, no contingency. $25 crushing and screening looked a bit, mining, crushing and screening looked a bit tight. $50 road haulage over 500 kilometres, 10 cents a tonne kilometre. I thought probably more likely 12. Port, $10, woefully inadequate. What we now do is mining, crushing and screening for about 25, and we haul 500 kilometres for about $28 a tonne. And there is no one else in bulk commodity transport who can do that. But let me use a bit of time to move forward. I've already given you the important disclaimer. Geez, it's great to be an iron ore miner. Everyone wants to talk to you at conferences. They come up, it's great. I made a joke when I spoke at Diggers last that the only time I see my business cards is when I go to the urinal and one floats past. Everyone wants to talk about gold, and there's obvious reasons going through the roof. But let's have a talk about what actually drives the Australian economy. The number one export of this country is iron ore. The richest people in this country, you're probably getting spammed by text messages from big, fat, wealthy billionaires who've made all their money on iron ore. BHP, Rio, they've made the biggest companies in mining in this country have made their money on iron ore. Everyone's getting excited about gold in Western Australia. Diggers this year will be a complete gold fest. The Western Australian government must be absolutely delighted with the royalty income they're going to get over gold going to 5,000 Aussie dollars an ounce. Do you know how much royalty revenue this Western Australian government gets from the gold mining industry? Anyone know? In order? Sean would know. It's about $300 or $400 million. Iron ore, 10 billion. Gold doesn't matter to the Western Australian government and their fiscal budget. What actually matters is iron ore. The federal government, I know you guys don't really care about Western Australian politics or economies, take our GST and ignore us. So iron ore, $43 billion of income tax. The value of iron ore exports to Australia are 120 billion. It is the big kahuna in town. And it's not going anywhere. Everyone's worried about the iron ore price. In the most recent budget, Chalmers has indicated the Australian government, in their wisdom, think that the correct price for the forward outlook is $60 US. Fantastic, I thought. There's nothing certain that he's got it wrong, so we're looking good. Every year for the last 5 years, we have tried to convince people that iron ore is somewhere to invest, and everyone has been convinced that it's coming down, and it never has. It is an indicator of global growth. It has established a very strong trading band in and around $100 US. But the good thing about responsible iron ore mining is you can make money through the whole cycle. So I wanted to have a bit of a rant, and that was the cartoon. But I didn't just stop at one cartoon. I wanted to, second one, this was about the forecasters. They always get it wrong. And the last one was in case I get asked the question, which I often do, about Simandou as the Pilbara killer. No one is more well-credentialed than me, having fucked up a few of them, to show how difficult it is to mine in Africa, particularly in bulk commodity. Julian introduced me as a gold miner. I've operated gold mines in Australia. I've built and operated a number of gold mines in Africa. And I got into that after trying to build bulk commodity iron ore mines in Africa and finding it incredibly difficult. It is ironic that I would have spoken to the Sydney Mining Club about the fact that we all should be investing in Africa. We have seen a screaming U-turn in global politics since then. The internet, Berlin Wall falling down in my early university years, the belief that the world trade was actually moving to a more responsible and consistent model has been proven to be not just incorrect, but fundamentally the wrong way. We've now got the most difficult and volatile international trade circumstances we've ever seen. We've got African governments who've worked out that in the old days you could only steal as much money as you could stick in a suitcase, and now you can steal the whole country. And so as much as we might complain about the electoral cycle and the Australian fiscal environment, what a wonderful place to be a miner, and what a wonderful place to be an iron ore miner. So I don't have any problem about other iron ore mines. We are a little pimple in the iron ore market, billions of tonnes going into thousands of steel mills around the world. The production of steel is not going anywhere. It has been very strongly tied to construction in China, but it's also very strongly tied to military spending, to machinery, to anything. Basically, urbanisation, any activity is going to require more and more steel. Right, let's get out of the commodity and talk a little bit about Fenix with the time I've got left. I spoke a bit about the track record. We last raised money in 2020. It was $15 million. We've since paid back $65 million to our shareholders, and we've generated more than $1 billion in cash flow from that $15 million initial raising, $200 million of which, in addition to the $65 million we've paid to shareholders, we've reinvested back into the business and particularly into infrastructure. We built a mine, we've now commissioned our second mine, and we're now building our third mine. We've been very profitable over those years. Last year we had about a $70 million EBITDA, $30 million net profit after tax. That was based on our consistent production of 1.3 million tonnes per annum, and we've traded about 25 to 30 cents forever. We're about to triple our production. We're currently running at 2.5 million tonnes, and in September we'll be running at 4 million tonnes. And the numbers that we're going to generate are really going to surprise people. We're due a re-rate, and that's why I'm here, and that's why I'm talking about it. Here's our neck of the world. Come back to what I was talking about where all the iron ore mines are. That map on the right-hand side of the screen, Western Australia. Above where the Western Australian map is to the left is the Pilbara, Port Hedland. That's where all the big guys play. We're in the Midwest. The dotted square is the rest of that map, and we have an incredibly strong advantage. We have storage facilities at Geraldton Port for 500,000 tonnes of iron ore, 3 of the largest on-wharf storage facilities there. We have exclusive access to berth 5. We have capacity to do between 10 and 15 million tonnes of the port, and that is a game changer. Work backwards from that. We don't have a railway. We have a state-of-the-art road haulage network that you can move around like a snake to multiple deposits, and we're starting to show what that system and what that model is all about. Having developed Iron Ridge, having commissioned Shine, we're now developing W11. We're going to move on to a number of deposits in the region. But let me show you what that looks like. We have 3 pillars. So although we look like a mining company, and I'm talking to the mining club, we mine, we're pretty good at it. We've also, that the fundamental part of our business, if you come back to that analysis of where our costs are, is actually logistics. We're a transport logistics company. We own our own equipment, we run it. Most of our employees are actually truck drivers, maintenance workshop people, and liaison officers for our transport logistics business. And then the third pillar of our business, we run a port services business, both for ourselves and third-party customers. We unload material, we store material, and we load material into ships and send it off to global customers. Iron ore is about logistics. It's about integrating those operations as being involved and actively participating in all 3 of those parts of the business. Let me show you what that looks like. Probably need to turn that down a bit. I was going to talk about it. So here's Iron Ridge. You can see that really high-grade black ore body sticking down the middle. We keep this really simple, 3-to-1 strip ratio. It's been an incredibly consistent operation. 1 digger, 4 or 5 trucks, very small footprint. We would operate the smallest footprint of any open cut mine, particularly in iron ore in Western Australia. It meant that we've had to be really, really efficient. The reason for that is heritage. This is an incredibly sensitive area. This is a place where 40,000 years ago, human beings, the Wadjuri Yamaji people, were mining ochre. It's the oldest known human mine in the world, and we're the current miners. Very simple crushing and screening, and then this is the key bit, the integration between our mining activities, loading these wonderful 60-metre quad road trains on their 500-kilometre road trip into Geraldton. Very high tech. Everything about these trucks is managed. A lot of artificial intelligence and a lot of things that a very mature industry like road haulage, we do uniquely. This is the 3rd biggest city in Western Australia. We drive our trucks right through the middle of it. We've got a depot on the outside of town. It's also a training centre. We do all our own maintenance, refuel and cleaning of the trucks. We've got one of a kind in the world, a driver simulator. This is the Geraldton Port. We have the truck unloader. These sheds, the scale of these are amazing. One of our sheds, you can fit 2 rugby fields end on end inside it. And we load Panamax boats, so 60,000 dry weight tonnes. Takes us about a day to load them, so you can work out what our capacity is. And we send those off to customers, predominantly China, but we also have a range of regional customers who can't accept Cape-size vessels, Korea, Indonesia, Malaysia, and other places. So, with the time I have left, if you think about our 3 pillars, let me run through them. Iron Ridge, we mine it at 1.4 million tonnes per annum, incredibly consistently, a 64% lump product and a 63% fines product. We get a premium price for that. Shine is a lower grade product. We're going to average out about 60% there. We're also being successful at selling a low 52% product. We're currently running that at 1.2 million tonnes. We're going to step that up to about 2 million tonnes a year next year. And the third mine is one we are commissioning as we speak. Commissioning greenfields projects is a much more difficult thing than it's ever been. We've done it twice and we're doing it a third time. We're on track to commission that mine on budget, on time, 3 in a row in the September quarter. Stay tuned for that. That'll be 1.5 million tonnes per annum. That last one is the most significant because if you come back to that first picture and I spoke about the world range and the hundreds of millions of tonnes that are there, those tonnes are owned by Sinosteel, now controlled by Bow Steel. And our third mine is a right to mine agreement we have negotiated with Bow Steel. And we have a 10 million tonne right to mine there. These are little mines. And so one of the things that affects our value is a view that the traditional way of valuing a mining company is look at their costs, look at their margin, and then times that by the mine life. This is the keyhole to the rest of the world range. We're going to nail this mine and we're going to do a bigger agreement with Bow Steel to unlock the rest of the world range. That's what we're working on. That's the reason we're investing in infrastructure. We currently have a fleet of about 45 of these 60-metre quad road trains. If you add the value of the prime mover and the trailers, they're about $2 million each. So you can think about the asset value we've got in the business in that fleet. And when we get W11, we've got trucks arriving every couple of days at the moment. We'll have 70 of those road trains, so roughly $150 million worth of fleet working for us by September. We've got a 40-hectare depot training facility in Geraldton. But the real value from an asset perspective in our business is the assets we own at Geraldton Port. So these are owned by Fenix. The insured replacement value for these sheds is $300 million. Much more importantly, they're priceless. If you're an iron ore miner or a silica sands hopeful or a vanadium bulk commodity producer or a potash producer, you're desperately trying to get allocation at a port. You're talking to Cube or Toll or us about how do we get our product into a boat. We have Shed 5, Shed 13, Shed 4. It's 15 million tonnes of capacity. We own them. We own the infrastructure that connects them, the conveyor belts, the truck unloader, and the access to the rail unloader. So we are working backwards from that with our plans about expansion. So, summarising, key catalyst in the next couple of months, we're going to 4 million tonnes. People have got used to us making 30, 40, $50 million a year, depending on the iron ore price, sometimes paying a dividend, sometimes not. But we're about to triple those numbers. At 4 million tonnes a year, we have the capacity and the opportunity to develop an EBITDA of $150 to $200 million, again, depending on the iron ore price. But that's equivalent to our market cap currently. So there's an opportunity here. Clearly, the priority is to expand our ore reserves. We're just building our third mine. We want to keep mining here for decades. We want to do 10 to 15 million tonnes a year. Stay tuned for opportunities on bigger ore bodies. We just missed out on an acquisition of CZR, 30 or 40 million tonnes of iron ore. Rio Tinto came over the top. But we've got other things that we're looking at. And we've got a very small team, and we're just really focused about making money. Myself and the board own about 15% of the company, and we really have a very, very strong focus on delivering value. We've traded sideways for a long time now. Market cap's $215 million. 50 to $60 million of that, depending on the day, is cash. So the EV is embarrassingly small compared to our earnings potential, growth potential. We self-fund We buy trucks, we have chattel mortgages against those, but we don't have any senior debt in the company. And these mines that we're developing, we have the capital. The W11 mine I mentioned we're commissioning at the moment, $25 million. 15 of that is to build the road to connect the mine. The other 10 is ancillary mining, crushing, screening and camp expansion capital. So these are not hugely consumptive capital mines. We can continue to incrementally build this company and that's our plan. I really look forward to some discussions afterwards and any questions. Thanks very much for your time.
Well, that's a killer story. Do you go to BMO with this? Or?
Not yet.
Not yet? No. Well, they know you down there from, you've been there with the gold story, so looks like it's ready for a re-rate. That's a big company for $215 million.